Hello and welcome to Pro Trader Strategies market commentary for Tuesday, September the 17th. My name's Eric Wilkinson, and yes, you may recognize me as the Wolfman from mainstream media. But what I'm here to teach you how to do is implement option strategies. Anybody can teach you guys how to build an option strategy. Implementation is the make or break in any successful option trader's strategy. So, without further ado, remember past performance of any trading system or methodology is not necessarily indicative of future results. And let's get on with the economic data. Not a whole lot to see across the pond other than manufacturing sales out of Europe out of Canada, and those came in at negative 1.3%, expected to be negative 0.3%. And they revised last month's number down by a couple of tenths. But back here in the United States, everybody's been wondering if we are going to head into a recession. Well, the economic data still isn't showing it. We got capacity utilization rate coming in at 77.9, expected to be 77.6. Pretty close to in line, but slightly better, which is always good. Industrial production is really where we started seeing a shining light, and that came in at 0.6%. Expected to be 0.2%, so higher than expected there. And remember, last month number did come in as a negative. They did revise that up to from a negative 0.2 to a negative 0.1, so a nice revision there as well. National Association for Home Builders, which is the NAHB building index, and basically what that is it's a gauge of the home builders and their outlook on that market. So it came in at 68, expected to be 66, so better than expected there. And last month's number revised up from 66 to 67. Tomorrow, remember, we start the FOMC. Actually, the FOMC starts today, where they start discussing. They release the results tomorrow. So all things being equal, I think today is going to be a relatively quiet day as people put on hedges and kind of set up for that meeting and what they're going to talk about. All right, sorry. On to the overall markets. We've got crude oil still in the 60s, but coming off by about $2.69. You know, yesterday was a wild ride based on Saudi Arabia getting bombed by drones from Iran. Well, you know, everybody was worried about their going offline or not being able to meet production. Well, it looks like that's not even going to be a case. Remember, we talked about they have all kinds of oil over there, you guys, and they already limit their production as it is to try and help limit supply and drive demand, right? If you have too much supply, then the price just goes into the tank, and they try to regulate all of the supply coming out. Well, if one corridor is not producing, they can ramp up capacity elsewhere, and that's what they came out and said today. So we're seeing this sell-off in crude oil down by about $2.60. Now, if there's any more turmoil there, then that could change things as well. But I don't see that as being a major issue right now. So I do have a trade for you that I'm playing anyway that we'll talk about here in a little bit. On to gold futures. They are moving higher today by about $2.50. It looks like they're finding a little bit of a bottom here. The trough kind of coming in where we saw it. It wants to stay up in this $15 1500 area. You can see yesterday or the last couple of weeks we came down there and tested it. Yesterday made it look like we were getting a little bit of top and maybe come back down there to test that 1500 or break through that 1500. You can see today we were able to come down and test that 1500 handle that held, and now we're starting to see a rally. As you can see, we are very close to the highs of the day, only about $1 off. So on the chart it doesn't look like anything at all, but that 1500 psychological level here is going to act as support as those bulls really try to hold on to that, or the gold bugs, if you will. And then we move over to the bonds. They are starting to move a little bit higher. Some of this is just too much coming out of it. We would say that, you know, this correction was a little bit overdone when we get that much of a sell-off and not really anything changing. I think that people were trying to get out of some of those speculative positions, and that caused us to really fall off. Again, now those shorts from the tops up here, these shorts are going to want to cover ahead of tomorrow. So that's what's given us this little bit of a bounce back up into the close to that 160 handle that I talked about earlier when we were trying to go up and through there, that was getting a little bit too far. We went up all the way to 167, which was a little crazy. Now it's going to be very dependent on the FOMC statement. We can see the VIX here is climbing a little bit higher today by about 15 pennies or 15 ticks there, and that's basically because we're seeing some negativity in the equities. Again, I think that most of this is really about hedging up positions, getting ready for the statement, because really at this juncture it could go either way. I'm on the camp that we haven't seen economic data to really support a continued easing type of cycle here for the FOMC. Other people are saying because it's global, we need to lower our interest rates in order to facilitate that and make sure we don't go into a recession here. I think that we're pretty solid and don't really need to lower interest rates, but we'll have to really see what the Fed is thinking going forward. All right, NASDAQ is off by about 50 cents right now. Really nothing to see. It's pretty much unchanged, as is E-mini S&Ps. That three ticks can really be made up easily. Yesterday, what I was looking at is this little setup right here where it looked like we got a bit of a top there, but yesterday with the green doji, looking like this, kind of, but green, obviously, that kind of gives me the idea that it's a continuation pattern. Now, you've heard me talk about this last week and even part of this week, that I think that we are going to, in the next, I thought it was going to be this week, at least this week or next week, I think we're going to go up there and print those highs in the equities, because I think that the economic data out there really is supportive of that. So I'm looking for equities to continue higher here going forward, and unless there's some kind of kink. Now tomorrow could throw a little tantrum if the FOMC comes out, doesn't do anything with rates, which I don't believe they're expected to, and if they don't move rates, it's going to be in their lexicon or what they say in that statement. That if they say, hey, I think the economy is fine, nothing's going to happen, we're not going to do interest rates, I think we could see the equities roll over a little bit, throw a tantrum, but then continue back higher towards those all-time highs. All right, USO is the trade that I put on, and the reason why I did this, you can see we got that spike in volatility off of the bombing and everything else in Saudi Arabia. Today, Saudi Arabia comes out and says that, hey, it didn't really do anything. It didn't even put a dent in our production, so we can make up for that elsewhere. I think we'll see volatility come out as we migrate back down and kind of get back into those mid-50s in crude oil. That would kind of line up nicely with what we're seeing here, the point of control with USO. So having said that, with USO, to take advantage of that whole scenario, I don't think it's really going to put a dent in it. Like I said, I went into the October and I decided to sell some calls because I don't think that we're going to be able to sustain higher prices. That would really hurt the economy, and then that would drive down demand, right? So I'm looking for this to hold at this 1350 area. So I went in and sold some calls in there, and I did the October 13.5 calls, which lines up with that value area high, and sold those for 30 cents. So if we get the volatility coming out, directionality continues to come off back down to about that 11-12 area, which lines up with that $55 a barrel in crude oil, I think I'll be all right there. So trying to take advantage of all of those things. It's all about implementation, like I said, all right? So that's all I got for you guys today, other than if you can't take that, take it easy.